Hey guys, welcome back. So in this video or this lecture, we are going to be looking at ICT lower time frame entry secret. Right? I know SMC have entry secrets. Everybody have their own confirmation pattern, but this is one of the best. The best confirmations I've put together for you. I've been using confirmations for quite some time, although I learned from ICT, but just want to see my own view of it, then compare it to what you're doing. And don't take my word for it. Just whatever you're watching here, whatever you're learning here, you can go back and study it. All right. So first, we'll be looking at the most common entry pattern. I think this is common for almost all the strategies. Is this pattern because some people this is a break of structure or a change of character or MSS or shift in market structure, whatever it may be to you. That's why I did not label anything. I just use lines. Okay. So this is optimum trade entry according to ICT. I've thought about this entry pattern before. I think in episode 1 or 2, something like that. I cannot remember. It's also the simple entry model. It's the simplest kind of entry you could see out there, and it's the most common, right? It's the most common. But if you are fixated on this particular entry model, many times you get mistreated a lot of times because there are other types of entries you could use, but you don't know them. But I'll be breaking everything down for you and how you can find these entries and when to look for these entries. But some people don't even like the confirmation patterns. They just set their limit and take their trades. Okay, so this is the optimum trade entry, OT, or simple entry module, or however you may know it. We have price for a bullish reversal. Okay, it's also the same thing for a bearish reversal. Just turn everything upside down, right? So we have price coming down into a, let's say, fair value gap, previous DVG, new week opening gap, new day opening gap, or previous deal, something, anything, any higher time frame POI, right? And price retraces back up, then breaks this low, then breaks this other high again. Breaking this high is telling you that price is ready to reverse at this moment. Because I've had some questions where people have been asking me that they don't understand the fair value gap and all stuff. I believe this video will break everything down for you. Okay, so this is what is called fair value gap. You can see the space between these three candles. We have the first candle here, the second candle, and the third candle. So this space between those candles is a fair value gap. Price needs to retrace back into that fair value gap. Then that there should be your entry to trade long or to buy. This is the most common entry pattern out there. Okay, let's look at another one. We have the volume imbalance entry. I know this will sound quite strange because I've never talked about this before, not even on the Telegram channel. I just promised to make a video for it, and this is the video I promised, so I'm keeping my promise. So we have price dropping into a higher time frame POI. Let's just assume that there is a higher time frame POI there on the left where price needs to reverse from. Okay, so price drop there, retraces and breaks that low again. Now see the trick. As it breaks this low, it leaves what? Volume imbalance. I made a video on types of inefficiency. So if you don't know what volume imbalance is, you can refer back to that video, that lecture. Watch everything there, learn everything there, and you understand what volume imbalance is, right? So price leaves volume imbalance while breaking this low. Now when price is coming back, you don't want to wait for price to take this high out. Yes, trust me. Because if you're waiting for price to take this high out, you can see what price does. Price trades into that volume imbalance, retraces back to this fair value gap. Look at that. Look carefully. There's a fair value gap there. One candle, two candles, three candles. In between those candles that was not priced um, efficiently is a fair value gap. Once price trades into that volume imbalance, it needs to trade into that fair value gap, and there is your entry. This entry pattern is not that common, but trust me, it's there. If you study it, you find it, or in case you come across it any day, you know what to do. Because if you are waiting for price to break this high, you can see what happens. Price breaks that high, and it's no more retracing for you. You wait, you set your order, and price will not pick you. At the end of the day, you end up missing trades. This is volume imbalance entry. Let's look at the next. So we have void entry. Void entry, yeah, All these entries, like you confused. Where am I getting them from? This is real. Okay, this is real. There are many types of entries. There's even QML, different types of entry. Everybody have different types of entries. So I'm bringing this one out publicly to you, right? So we have price trading into a higher time frame POI. Let's assume there's a higher time frame POI on the left, and always indicate as a reversal point. So price retraces back there, trades back there, retreats a bit, then breaks that low with a void. This time, not volume imbalance, but what a void. You should know what void means. I made a lecture about it. Okay, so once price is trading back into that void, it consolidates inside that void, and that there is your entry. There's a fair value gap below here. Yes, you can see this candle, second candle and third candle. There's a gap between them, but you don't want to wait for price to trade into that fair value gap again for your entry. Trust me, you don't want to. Go and study these things. Go and find them out. I'm going to show you real life um charts so you see them yourselves, right? So once price trades into that void and you see this consolidation about 3 to 4 candles, that there is your entry. That's telling that price is ready to kick off, not coming back for this fair value gap. This happens rarely, but yes, it happens. In case you come across it, you know what to do, right? That's a void entry. Then the unicorn entry. This is going to be all the entry I'm talking about. So that's 4 entries, entry pattern. So you know what to do in case you come across them. The unicorn trade entry is where price trades into if the previous favorable gap or any POI at all, retraces a bit, then breaks that low, taking out liquidity, then coming back to break this high. But why take that this up close candle is the breaker block. You can see that this up close candle is a breaker, but in that breaker there's a fair value gap. Let me show you something on the OT. You can see that the OT is different. In that breaker, there is no fair value gap. Note the difference. In this breaker on the OT, there's no fair value gap. But in the unicorn entry, there's a fair value gap in that breaker, inside that breaker. So fair value gap inside that breaker, crossing there should be your entry. Yes, you have fair value gaps below, 1 fair value gap, 2, and even 3. You don't want to worry about price coming down for these ones anymore. This is why you get missed entries a lot. I've seen most of people complain about missed entries and all of that. I just love to keep quiet because I've not made a lecture about it, so it will sound confusing. That's why I decided to bring this lecture. And it's very important to know this kind of entries so you don't miss trades anymore. And this kind of entries helps you get good risk to reward ratio. I'm going to talk about that. So a fair value gap inside a fair value gap in a breaker is what is the unicorn entry. Now, before we proceed, I want you to pick your notes and write these things out. So now write these things out. For PDH, PDL, PWH, and PWL, use the 5-minute time frame for confirmation. Very important. Now, you might not understand all these writings, all these abbreviations, so let me break them down. For previous day high, all of these here are high time frame POIs. So for previous day high, that's if you want price to trade into a previous day high, or if you are expecting price to trade into a previous day low, or a previous week high and a previous week low, always use the 5-minute time frame confirmation. I see some people going to use the 1-minute time frame confirmation, thereby they get trapped in a failed breaker. This is what is called failed breaker. I'm going to talk about that maybe sometime in the future. If you use 1-minute time frame too much for confirmation, you experience a lot of failed breakers or sometimes missed entries. Okay, so for PDH, PDL, PWH, and PWL, use the 5-minute time frame for confirmation. Very important. Write this down. Now, for previous day fair value gap, a new day opens and you want price to trade back into a previous day fair value gap, use 1-minute time frame for confirmation. For a previous day fair value gap, you don't want to be using a 5-minute time frame. If you use a 5-minute time frame for confirmation on PDFVG, then you likely get missed entries because whatever is doing there, it's very, very fast. Price does whatever it does on a previous day fair value gap very fast and start rejecting. So if you're waiting for 5-minute time frame confirmation, you might likely miss the whole fun. Okay, so for intraday AMD, I'll talk about intraday AMD. In case you don't understand what intraday AMD, check this channel, you find the video. use 5 minute time frame for confirmation. Yeah, that's very important. So you have and you have intraday AMD where you want price to trade back into. Don't use the 1 minute time frame for confirmation. Just trust me. If you use the 1 minute time frame for confirmation, you might fall into the trap of failed breakers. This happens every time. Okay, I will show example of failed breaker, but I'm not going to talk. I'm not going to elaborate on it. And for the new week opening gap and new day opening gap, use 1 minute time frame for confirmation. These are from my own personal research and study thoroughly. If you want to use 1 minute time frame confirmation for all the POIs, you get it wrong. If you want to use 5 minute time frame confirmation for all the POIs, you get it wrong. You might likely miss many trades. So I have gone through this for you not to go through this. That's why I'm making this video, right? Okay, so now let's look at real chart scenario. All right, so look at this chart. We have this chart is a 5 minute time frame, right? It's a 5 minute time frame, and we want to be talking about the confirmation OT confirmation. So we have intraday AM there on the left. There's no much information on my chart, so just pay attention to what I'm showing you. There's an intraday AMD on the left, probably on the 15 minute and 1 hour, and you want price to trade back into that before continuing. So what do? You wait for 5 minute time frame OT, dropping into that intraday AMD, and this break of this high. To some of you, that's not a break, right? To some of you, it's not a simple entry model. To some of you, it's not optimal trade entry. But trust me, it is. Now you want to take this other break as the OT, but it's not. Weeks breaking a high can also be a confirmation, a lower time frame confirmation. Go and study these things. Don't take my word for it. Now, what do you want to do? If you are looking for, so what you do, if you are looking for confirmation on the 5 minute time frame, does not necessarily mean you should take your trade on the 5 minute time frame, on the 5 minute time frame there, because you will not get a good risk to reward ratio. What you want to do is when price trades into a PY like this, like the intraday AMD, you just want to patiently wait for the OT or any of the confirmation I've just listed earlier on the 5 minute time frame for intraday. So once price break that high, what do? You go back, you go down to your 1 minute time frame. Now, what do you do with the 1 minute time frame? Let's look at that. Okay, so this is the same chart on the 1 minute time frame. I just showed you the 5 minute time frame price action, and this is the 1 minute time frame price action. So what do? You want to find out your premium and discount of that OT on the 5 minute time frame. This was the high that was broken on the 5 minute time frame. Trust me, you don't want to be looking for a break of high on the 1 minute time frame when price is trading into an intraday AMD. You don't want to do that. What you want to do is you want to wait for that confirmation on the 5 minute time frame, then go down to your 1 minute time frame, find a premium and discount. Price will always trade back to the discount, right? What you want to do is find a draw on liquidity, a magnet, a price magnet that will draw price on the discount. You don't want to be buying on the premium. Now, some of you might not understand what I mean by premium and discount. See, like this, you want to buy a commodity, right, or a good, or a product, anything, and the price of that product is really high. What do you do instead? You wait for the price to come down so you can buy it low. Let's say you're a retailer or a wholesale, so you're buying it from the manufacturer. You wait for the price to be on a discount, like you just like discounts. People give discount for things when the price is low. You buy it there. It's not the same price when it's premium. So see it in this chart scenario. When price is in premium, you don't want to buy here in premium. Price have broken this high. You use your Fibonacci tool. I've taught about ICT Fibonacci, so you know how to set your tools to give you this kind of pattern. You take this low, mark it with this high, you find out your premium, you find out your discount, you find out your equilibrium. That's 50% of the two sides. You don't want to be looking at this premium. You don't want to be doing anything here. You want to look at any draw liquidity on the discount. Now, which draw liquidity is there on the discount, the 1 minute time frame? There is a fair value gap there. If you can see, just pause the video and look at it very well. Look at this price action very well. Price trades into that draw on liquidity on the discount on the 1 minute time frame. Then does what? Start buying. That's what you want to do. So you pick your entry there and your stop loss just below this low. That could give you about 8 or 6 risk to reward ratio. Let's look at another example. Okay, so we have another intraday AMD POI and 5 minute time frame confirmation, OTE, right? So this is why I say you get a lot of field breakers if you are using 1 minute time frame for this intraday AMD. Trust me, you don't want to do it. Intraday AMD, make sure you stick to 5 minute time frame confirmation. Now, what happens? Price consolidates, drop into that intraday AMD first. You can see this first touch inside that intraday, inside that fair value gap. In case you don't understand what it means when I say intraday AMD, please go and watch that video again. So price drop inside that fair value gap. On the 1 minute time frame, there would certainly be a breaker there for you. But price takes out that high, making it a failed breaker, and did exactly the same thing. On the 5 minute time frame, this is no confirmation. All of this are just consolidations. But on the 1 minute time frame, you might have already placed an order there, and price takes that high again. You want to wait for the initial break of structure, in the initial break of this low, before you get that as your confirmation on the 5 minute time frame. So once price does that, break that low, what are you doing? You're going down to the 1 minute time frame to find your premium and discount, and find a draw liquidity on the premium or discount depending on the direction of the trade. Now let's go to the 1 minute time frame. So this is the 1 minute time frame. And look at all of this from the first touch inside that intraday AMD. You probably assume that on the 1 minute time frame, this is what your OT or your simple entry model, because you can see price sweeping this high, coming down to sweep this low, and let's say leaving that fair value gap there. So you probably would have placed a sell order there, your stop loss below here, and price does what? Price takes you out. Why? Because you are looking at confirmation with 1 minute time frame on an intraday AMD POI. Understand these things, please. Now we have the second scenario on the 1 minute time frame. Price takes out this high. You can see that breaks this low and still leave fair value gap there. In that fair value gap, you probably would have placed a sell order there to sell. The price does what? Went ahead and take this high. So for the intraday AMD, you want to wait for 5 minute time frame confirmation. No matter how long it takes, you want to wait for 5 minute time frame confirmation. So when you finally get the 5 minute time frame confirmation, you can see that this was the 5 minute time frame confirmation. The use of Fibonacci to find out your premium and discount. So this is the bottom, this is the head. These are premium, these are discounts. So this time we are not buying. So we want to sell. So we want to sell, like we want price to go higher first before we sell. If you want to buy, you want price to come lower first before you buy. I hope you understand that. But if you look at the whole of these premium levels on the 1 minute time frame, where is a fair value gap there? You're looking for any magnet, anything that price can magnet to. This high is an inducement, yes, but is there any fair value gap that price could possibly trade into? Yeah, no, but there is a fair value gap there. You can see that, and price trades back into there. You place your entry there, stop loss just above that candle, causing that fair value gap, and you get about 8 risk to reward ratio. I think this was 8 risk to reward ratio. Yeah, this is the secret I use on my entries. None of my students know about this, and I'm making it official now. Nobody, even on Telegram channel, nobody know about this. It's very private, very secret. It's a premium knowledge, okay, and I'm giving it out for free, right? So let's look at another example. So 5 minute time frame confirmation OT. This is another example, right? So look at this. We have a previous day low, PDL, right? And in PDL, what do I tell you to use? 5 minute time frame confirmation always. You only use 1 minute time frame confirmation for NWG, NDOG, or previous day fair value gap, right? So we have price sweeping this PDL. You don't want to take any action there. I know some people will place order here so that they can catch it from the beginning and get good risk reward ratio, but most of the times you don't know for sure if price is going to reverse at this point. So I don't like taking those kind of unnecessary risk. I want my confirmation. What we do is wait for price to break that high. After price sweeps for the PDL, wait for price to break that high. Price reached for this level and retraces back. There's no break of high. There's no confirmation yet. Price reached for this level, retraces back. There's still no confirmation yet. Then price finally breaks that high. That's when we get our 5 minute time frame confirmation. I know by this at this time, all of you be like, okay, I've missed a lot of pips already. I missed a lot of profit already, allowing price to move from here to this level. Yeah, I know some people feel like that, but not every move you catch. Just wait for the confirmation. If the confirmation doesn't play out, then that's not your trade. Okay. So now let's go to the 1 minute time frame and see where we could possibly trade. Yeah. All right. So the 1 minute time frame, this was the high that was supposed to be broken. I know we had another break of high here, trade back into this favorably gap and pick your trade. But what's the need if price would still come back for it? Okay. So we have the premium, this high to this low, and we are buying. So we want to be buying at the discount. So yes, we want to be buying at the discount. You don't want to be buying at this favorably gap there or this favorably gap here, because that is at the premium. Take note of that. Price street, you want to find all of these levels. Find where price could possibly retrace to in all of these levels. These things are not just random. The algorithm. So price respects these levels. We have a fair value gap there. Yes, it was tapped into, but not completely. So I have been getting some questions recently where people ask me, can a week invalidate a fair value gap? This is another kind of question you ask. Okay, you want to know if a fair value gap can be priced into twice. Yes, it can. That's why it is what is called inverse fair value gap. Okay, so we have price coming for that fair value gap on the discount, and that there's your trade. Stop loss just below that candle, about 6 to 1 ratio you get on this trade, just like that. Just this small trade, about how many pips, could give you about 6 to 1 ratio. And trading is all about the game of probability, risk management, and risk to reward ratio. So even if you have 4 losing streaks or 5 losing streaks, just one trade like this, 6 to reward ratio, could get you back of those from that drawdown, right? So let's look at another example. All right, so we have a PDFVG as PY there. Price wants to treat into that previous day fair value gap, and in this case we are not using what, we are not using the 5 minutes time frame confirmation, because all of this will be one trade, will be one leg on the 5 minutes time frame. All of this is just one leg on the 5 minute time frame, and you see, can see price is not retracing back to any discount or any premium, anything. You want to be using for previous day fair value gap. Why? Is because price rejects so quickly when it trades into previous day fair value gap than it rejects when it trades into intraday AMD or previous day high or low. Write that down. Very important. So price breaks this low. To some people, yes, that you want price to trade back into that fair value gap because that's OT, but price did not do that. Instead, price did what? Break this low again, and you can see this is something close to the unicorn trade entry. Look at that fair value gap, just through that low. This time you don't need to worry about price coming for this fair value gap, because you have something similar to the unicorn trade entry here. Fair value gap in that same level of the low. Price trade there, that's your trade. About 5 risk to reward ratio or 6 risk to reward ratio. Your stop loss above this high. Go and study these things, and I want to get your feedback. Don't take my word for it. Now let's look at the unicorn entry 1 minute time frame. A perfect example of the unicorn entry. So we have price trading into previous day fair value gap again, and this is the 1 minute time frame. On the 5 minute time frame, all of this is just one leg, and you cannot see price retracing back to any discount. So price breaks this low, taps into that previous day fair value gap. What next? It breaks that high, and you can see the last up close candle there before the sweep of this low. The last up close candle there is what? Is the breaker, and there is a fair value gap inside that breaker. And this is real chart scenario. This is not something I made up. It's something that happens. There are a lot of fair value gaps below here, but price did not trade into any of them because of this fair value gap going through that breaker, and that is the unicorn entry. You want to pick your trade there immediately on the 1 minute time frame. If you are not fast enough, you likely miss this kind of trades, and there's your trade till the next high, and that could give you just stop loss below this breaker, and that could give you about 4, 5, 6 risk to reward ratio. There are many people who don't get high risk to reward ratio consistently, And this kind of confirmations will help you because we don't have much POI. And our POI, from what I teach, is not that complicated. You just want to find out your new day and find out the previous day draw on liquidity. Expect price to trade into that previous day draw on liquidity and find your confirmation and trade according to the bias. Just that. It sounds simple, it's easier said than done, yes, but with much practice, with much time, consistently, patiently doing this same thing all over and over again, you get used to it. If you find this video insightful, okay, do well to hit the subscribe button. I'll be dropping more lectures like this. This is just, I think, episode 25. We are almost done with the course. I'm not going to tell you which episode I'm going to stop, but this is episode 25, and we've come a long way so far. So if this is your first time visiting the channel, or if you enjoyed the video, hit the subscribe button, hit the like button, and share the video to any of your friends. Okay, so until next time, be safe.